As an investor, I'm a really big fan of diversification. So I would never encourage an investor to sell all of their stocks and get 100% into investing into real estate. I think that it's a good idea for most investors to consider diversifying into both.
If you're not conscious about your investment strategy, you won't end up where you want to be, not financially or as a human. On this show, we interview highly successful investors and share how they overcame limitations to become unstoppable forces of success. If you're ready to learn what it is to be a conscious investor so you can end up where you want, keep listening.
Conscious investor, welcome back. I'm here with my friend Jeremy, and this conversation is going to really resonate with you because, conscious investor, you love your job. You love what you're doing. You love your time with your family. Like, you have things set, and yet you want to be wise with your investments. We're going to dive into that in just a moment. But, here we are. And when this comes out, this is going to be, probably halfway through the year. You're going to be thinking, what's my tax strategy? What's my plan? And some of you are having that, something just sold. Maybe you exited a deal and you're like, what are we going to do? Or, something happened. There's a capital event is what we'll call that, right? Maybe you haven't sat down with somebody to discuss a tax strategy. So I want to just send you down to the show notes, schedule a time with Mode Wealth so that you can have that tax strategy in place. It's not too late halfway through the year to actually, do some cleanup so that you can, wrap up 2023 in a powerful way, or whatever year it is when you're listening to this. Okay. So that is something I want to encourage you to do. But you know what? This conversation is going to be amazing. So we're going to just jump right in. Jeremy, thank you so much and welcome to The Conscious Investor.
Julie, thank you for having me on on your show. And I also thank you for the reminder that we're already halfway through the year at this point.
It's really wild how fast the year has gone, right?
That's right. Yep. 22 to 23. And before you know it, we'll be into 2024 and beyond. Time flies.
Man. And that means bye-bye 80% bonus depreciation. Oh, we're all going to be so sad. Well, Jeremy, we were talking, off air, we were talking about, just your experience with passive investing and conscious investor, hear this, active investing. And it's just really interesting. I love to just jump right in to the story and say, tell us about your experience with investing.
Sure, I'd be happy to. So I've been a busy sales professional for a couple of decades now. Back in 2012, my wife and I decided that we wanted to try our hand at fixing and flipping homes. And we did that. My dad was a general contractor. My wife just happened to have a knack for interior design work. And so we were purchasing homes, investing 30, 40, 50 grand into those homes, and then looking to either offload them to a buyer who was looking for a turnkey single family home to move into, or we were looking at, quite frankly, renting out that asset to a potential renter as well. The challenge for us is once we got into 2015, we made the decision to double down on children and went from 2 kids to 4 kids. And life at that
literally double downing.
Double downing on children. Yes. Kind of the 2-for-1 special, right? So we went from 2 kids to 4 kids, and life was getting really busy for our 2 older boys at the time, and actively managing single family homes and that fix and flip business was really becoming a second full-time job for us. So around that same time, we networked our way into a real estate sponsor that was looking to raise capital on a multifamily project that they had in Tennessee. I had never invested previously passively as an investor. That was my first time. I joke with people at that time, I didn't even know what the word syndication meant, right? So I used what they call the shotgun approach in investing. I held my breath, I plugged my nose, I trusted the sponsor, I sent in my 6-figure wire transfer and kind of hoped and prayed that that particular investment wouldn't be lost. and blessed to have gone full cycle in that particular opportunity. After 3 years, had doubled my money. And from that point, I was hooked on the passive investing in real estate strategy.
Oh gosh, there's so much there. I'm so grateful that you paused because I like the whole fix and flip space. I honestly don't have the risk profile or temperament for fix and flip. Is there any, did you ever feel that sense of vulnerability or lack of control because you're putting all this, this is how I view it. And I don't know, because I've never intentionally done a fix and flip, right? I've improved properties to, rent them out for a long haul and everything. But, I mean, like there's a substantial, like you said, 50, 75 grand going in. That's liquid. That's being infused directly into something. Did you and your wife ever feel that scale of vulnerability?
No, yeah, 100%. So when we first got started in the business, it was 2012. And if you recall history, we were kind of coming out of the global financial crisis, right? By the time 2013, 14, and 15 rolled around, it was getting incredibly competitive to buy single family homes. Oftentimes we were putting in offers on, tens of houses that we didn't even have a chance to look at because there wasn't enough time to do so. So it was just becoming a very competitive environment for us. The valuations of homes were increasing. What we thought the margins would look like weren't where we wanted them to be. And kind of the straw that broke the camel's back, so to speak, was in 2015 as we were looking to exit out of what was our final fix and flip property. We learned that the septic system had failed. Okay. So for the low price of, $35,000, which ate into the majority, of our profit margin, on that particular flip, that was kind of the writing on the wall for us. And it was time at that point to leave the renovation, the acquisition, the building, or I'm sorry, the plan really up to the sponsor to be able to implement their value add business strategy instead of us trying to do it on our own.
It takes so much bandwidth. Okay. And meanwhile, you were working a full-time job, and did your wife have another parenting, like being a mom is a full-time job, but sometimes moms have another full-time job that pays dollars and cents. So like, did your wife have another job outside of, being a mom or?
Yeah, good question. Thankfully, no. When our firstborn was born, my wife stepped out of working a day job to care for our children. And even today, she stays home and actually homeschools our 4 children. So I see quite a bit of my children throughout the course of the workday. But yeah, at that time, she was also kind of looking for, a side hustle, so to speak. And, helping with that fix and flip business was certainly a way for her, to be able to kind of have, quote unquote, a work to do while our children were younger. But it's when they started to get older and become involved in all their various activities. And then the doubling down from 2 to 4 made it very difficult for either her or I to be actively involved in managing, what they call tenants, toilets, termites, and trash, right?
Right. Do you have any horror stories aside from a $35,000, septic on a flip? We always had great residents. So I'm like, I don't have any of the bad stories. I just didn't like it's a job.
Yeah, I wouldn't call this a horror story necessarily. It's more of a sad story. And that is a number of the properties that we would go through. It was just kind of very remarkable to us, the unfortunate living conditions that some people, for whatever reason are forced to live into, or maybe choose to live in that type of an environment. But yeah, we saw a lot of very dilapidated homes, that's for sure.
Yeah. Yeah, it is amazing. And I think what a lot of people don't understand is the maintenance that is required on homes. And oh goodness, I'm like, we have a metal roof because we live in the mountains, and it's like, now I'm the one that goes on the roof and shovels the snow if it's a heavy snowfall. You get this because of your geography. Also, possibly like sometimes you do want to shed that weight off your roof. I love heights. I'm totally comfortable, so I'll head up there and it's fun to me. But I'm like, oh, these screws are popping out. Springtime comes around, $700 later. Paying somebody to redo the screws. It's like, I don't want to do that. But I told my husband, if we either pay the small price now, or we're going to have a headache on our hands. But oftentimes it's so much easier to defer necessary maintenance. And then you end up with something more substantial, and the dollars, unfortunately, people aren't always able to pay what is necessary.
Yeah, that's right.
Yeah. Wow. So you choose a shotgun approach. I mean, but this also, you and your wife have a high risk threshold, is what I'm assuming here, based upon what you've laid out so far. Is that correct?
Yeah, that would be correct. And I was one of the individuals that maxed out the 401k plan for the last 2 decades. We were blessed to have the 40-foot RV sitting in the driveway. We had our dream home paid off by the time I was 23 years of age. So really kind of the American dream story, right? But I wasn't making very good educated guesses or bets on some of the stocks that I was choosing to invest into. It was kind of like this, ratio of, for every 10 stocks I invested into, 1 was a home run, 8 of them were not, and 1 of them was just a terrible flop, right? So it was one of those things where I felt like at that time I needed to start investing into something that I know has proven over the history of time to be a good investment strategy, one that is not a get rich quick scheme, but one that allows the individual to build up wealth over time, while investing into a hard asset. Housing is one of the, very basic necessities or needs for life, right? For somebody to live in a particular unit or a particular home. And so we made the decision to do that, as I mentioned before, in 2015. And, now we're currently in 24 different investments as a limited partner investor. We're invested with 6 different sponsors in 8 different markets, around the United States.
Okay, question, because I am market agnostic, conscious investor. You, if you've been listening for any length of time, I'm market agnostic. I'm always partner driven because I can vet a market easy peasy. That's just looking at some data, some research, digging into the asset. But the people, I'm so driven by who the partners are. So, and one of the benefits I have found of that is there's a benefit to having all your assets in one market, because if you're the sponsor, that market inside and out. However, on the other side, as an investor, if I can be diversified across multiple states, multiple markets, something happens, something gets taken offline. I love that dynamic that it brings into the portfolio.
Yeah, that's right. You said it perfectly, Julie. One thing that I look into when I'm looking to make an investment with a particular sponsor is it's not just enough for me to know, like, and trust that person. There's a lot of people in my life that I know, like, and trust, but there's a lot of those people that I would never trust with $50,000 or $100,000 of mine, right? To pull off and execute, a value add business plan, in the syndication space. So I'm really primarily, when it comes to evaluating sponsors, which is obviously the people before the actual market or the deal itself. I'm a big fan of, of a trust-based relationship. I absolutely have to trust that person with the fiduciary responsibility of managing my capital and preserving my capital. But second to that, I need to know about their track record, right? I want to know about the last, 10 deals that they've, invested into. Have they had any exits? What have those exits looked like, in the lens of what their original projections were versus what the actual projections were. And I really want to know about transparency. I love digging into investments. and specifically looking into sponsors, I want to know about all of the times that, not all of them, but I want to know about the times where they've really struggled, right? I want to know that there were times where they've gotten beat up, or they've skinned their knees, or they've, struggled with adversity. It's one thing that we're seeing, right now in the current market conditions, with a number of sponsors doing, capital calls or suspended distributions. I'm comfortable with sponsors having suspended distributions and having capital calls, so long as I know that the sponsors are still in the deal and they're willing to see, that opportunity through. And I'm very confident that the sponsors that I've chosen to invest with myself, will do just that.
Mm-hmm. Yeah, it's really interesting. Some of the dynamics in the market as we're recording this, there are so many interesting things. And with your level of experience, it'd be interesting to hear your response, and just how you're internalizing that. I appreciate you sharing about, capital calls can happen. And we try to, it's important that, conscious investor hear this. If we've spoken on the phone, we talk about, like anything can happen. It's an investment. It's an opportunity. You have your plan, but anything can happen. Now, I'm blessed. Our deals are all online, performing. However, I have lots of friends that, different things have happened in the market. The conditions have shifted and those capital calls are happening. I'd love to know if anything that you're invested in has a capital call right now. And just a little more, you shared a little bit of your perspective on that, but I'd love to even go deeper into your thoughts and sentiments on how you would like operators to approach the passive investors.
Yeah, good question. So I have one opportunity right now that I'm invested in with that is having a capital call. And the genesis of that capital call is primarily there's just a debt problem. And that debt problem came about as a result of the drastic or historic, rise of interest rates. The deal itself is performing well. The renovation efforts are going well. The sponsors receiving or achieving, above what their pro forma expectations were on rent growth. Occupancy is going well. So the deal itself is performing on all of the metrics except for one, and that's on the debt side, right? So that particular investment, did require an additional capital infusion in order to make that deal remain liquid. But the key with the particular sponsor that I really appreciate about them is they were very early in letting investors know that there was some challenges on the debt side. Okay. So months in advance. So the investors were not kept wondering, and there was not a hidden element of surprise when they decided to let investors know that the deal was not performing on the debt side and that additional capital was needed to be infused into that particular opportunity.
I love that. That proactive communication is absolutely imperative when it comes to those scenarios. And although ours isn't a capital event, we're in my company's participating in ground up development, and there are a lot of moving parts and a lot of parts that can stall out that timeline and some waiting and, being fully transparent. I have the joy and pleasure, it's sometimes quite painful, of writing out the investor, email each month just to make sure, and you have to make sure, like, you need to know this is where it's at. This is how it affects the timeline. I think it can always be, it's not always doom and gloom, but it's just always letting people know this is where it's at.
Yeah. It's funny because in the public equity market, you don't find out about an issue until the earnings release, right? Which is almost too late after the fact. And that kind of will drive, upward or downward pressure on that particular stock. in this space that you're in and that I'm invested into as well, oftentimes we know about what some of those challenges are well in advance, which is the thing that I love about investing passively into real estate is, I can pick up the phone and I can have a conversation with the sponsor themselves, right? I know the team that's actually managing that value add business plan, whereas if I'm invested in Apple stock or Tesla stock, I'm not going to be able to pick up the phone and call the management team that's managing those companies.
Elon, what's going on? Why is their stock dropping?
That's right.
He's not taking your calls? I don't understand.
Not yet.
but that is something that's really important. When for conscious investors, they're very much drawn to that element as well. It's like, oh no, I can actually reach you. You're not dodging the calls or anything like that. You're accessible. And that proximity to what is actually taking place is really powerful.
Yeah, I know a lot of people in the space, they, especially newer investors, maybe, they like to focus on, what's the return profile. So they go straight to the equity multiple, they go straight to the, internal rate of return or the annual rate of return, the deal hold period, right? But the reality is I would much rather invest with a sponsor that has a lower return profile, but I know that I'm going to receive regular monthly updates from them. They're going to be fully transparent with me at every stage, of that value add business plan and the overall deal cycle. So I would much rather, as an investor, take a lower return expectation because let's be honest, those return expectations are just merely targets, right? Nobody has a crystal ball. If one of your guests listening to this has found one, please let me know. I'd like to buy it from you, right? The reality is we just don't know what the future is going to hold. A sponsor might be able to project a certain exit cap rate in 5 years, but how on earth do we know that exit cap rate is even going to be accurate? Right? If you look back at the last 5 years, did we know a recession was on the horizon in 2023? Did we know we were going to have a global pandemic crisis and that the world was going to be shut down in 2020? Those are things that we just don't know, right? So I really like sponsors that really err on the side of being incredibly transparent with their investors, but also sponsors that are willing to say, hey, this is kind of the best case scenario in this particular investment, and this is kind of the worst case scenario. So let's provide, for example, for our investors, best case, worst case exit cap rate, right? Let's provide a best case, worst case, on some of the operational expenditures, because the inflation monster is not only killing people's retirement plans right now, but the inflation monster is also eating into the profit that sponsors are able to achieve on the deals that they're currently managing. So well said. This is one of the elements that is so critical, and it's frustrating. And I imagine you're going to agree with this frustration of people going around and saying we underwrite conservatively, and it's like your numbers are based on a refi. Your numbers are based off of all of these magical things happening versus like, what if we extract all of that out, and how is this actually going to perform? For case in point is we have some government funds that come in, and it's, for the workforce, and that's great. That's not baked into the underwriting. Can't count on that. It's a government. You don't know that that's actually going to be there. There's no certainty in these different programs. And so it's like, okay, if we remove all of these elements, how is this really going to perform? It's just so many elements that are absolutely critical. Yeah, absolutely. And it's really up to the limited partner investors, it's their responsibility to really kind of, trust but verify, right? So I'm a big fan of, it doesn't take that much education to look through a pro forma statement, right? And to look at what the expected rental increases are going to be with the newly renovated units, and what are those comparables in that same market getting today for a renovated new product, right? So that's just one example, that many investors can kind of hone in on. The other one is I really like to work with sponsors that don't have a challenge raising capital. Okay. So I want to know on the last dozen deals that maybe they've raised investor capital on, what has been the time frame from the time that they launched that opportunity to investors until the time that that opportunity was fully subscribed. That tells you a lot about how potentially aggressive or non-aggressive the sponsor is being. If it took the sponsor 6 weeks to raise capital on a deal, that to me is a red flag. If it took the sponsor 6 days or less to raise capital on their last several offerings, that to me says that sponsor doesn't have to get really aggressive with their targets, their return targets. And more than likely to me, it tells me that those return projections are probably a little bit more accurate, or in fact, they are actually conservative.
Mm-hmm. Mm-hmm. Yeah, it's interesting. Well, I'll tell you, it's interesting. The whole, in conscious investor, I mean, a lot of you are sitting on the sidelines right now. A lot of you are waiting, and inflation monster is eating up your money, by the way. Just a reminder, every single day you're losing. But it's interesting as I have the opportunity to be, in proximity to, larger sponsors and such, to hear how things, the conditions are shifting with passive investors and that level of caution and such. It definitely is, having an impact on the duration it takes to bring that capital in for deals.
Yeah, that's right. Yeah, the inflation monster is a tough one that we keep bringing that one up. But the reality is there's a lot of people that, are banking on this nest egg, right, for retirement. And I remember when I was a kid, we talked about you'd have to have $1 million to retire, right? I'm going to retire when I'm 50 years old, and I'm going to be able to do that when I've built up $1 million, right? At the time when I was 12, that sounded like a lot of money, right? Fast
now
forward.
I'm like, yeah, I think that'll last you, I don't know, in assisted living. That's not going to go, your years are short.
No, and there's a lot of people that have, the bulk of their retirement money is either in the home that they live in, which is, largely for a lot of people, a liability as opposed to being an asset. But the other side of it is a lot of people have their retirement money locked up in a 401k plan. And I can tell you that I have been maxing out on my 401k plan for 2 decades. And I looked at the balance that's in that account versus what the actual money would look like after taxes. And then I looked at that number as it relates to how much money we currently need to live on as a family of 6. And I came to the realization that it's only about 3 years worth of money to live on as a family. And I've been maxing out my 401k plan for over 2 decades.
Yeah, there's no keeping up. How does that you like the details. So tell me if you let me know. Did you compare that to what if I put this in real estate?
Yes, I did. And I looked at the exact amount of money that I've personally invested into, right? Not including the employer match, but the amount of money that I personally put into the account. And I looked at that 20-year historical average of what the increase was on that investment that I was making. And then I looked at that in the lens of the passive investments that I've been making in real estate syndications over the last several years. And I came to the conclusion that if I had diverted that same amount of money that I was putting into my 401k and instead had put that into a real estate syndication with the expectation that that money would double on average about every 5 years, I came to the conclusion that my balance or that money itself would be worth 3 times more today than it has been sitting in my retirement plan.
Wow. I always say I'm grateful I learned about syndication and that I exited the single family space, but I'm like, golly, I wish I would have known about this sooner. So next question in my mind is, and I'm a conscious investor, I know you're thinking the same thing. So have you rolled over your 401k and are you directing that into real estate?
No, I still have a corporate W-2 job, so I have not been able to roll over those funds into a self-directed, vehicle. My plan, of course, would be to do that at some point down the road, and I have not yet bitten the bullet and just taken the 10% penalty and paid the taxes and sold out of my retirement plan altogether. As an investor, I'm a really big fan of diversification. If it's not already known to your audience here, my strategy as it relates to investing passively into real estate is the same kind of approach that I've used over the years when investing into the public equity market, and that is to diversify. So I would never encourage an investor to sell all of their stocks and get 100% into investing into real estate. I think that it's a good idea for most investors to consider diversifying into both.
Mm-hmm. The pendulum has gone full swing both ways. I feel very centered on that myself, where it's diversify the portfolio. Don't put everything in one basket.
That's right.
Yeah. Oh my gosh. I have so many other questions, but I want to honor your time. And I want to ask if there's anything that you think is really critical and for, conscious investors to understand about moving forward confidently, with investing passively in real estate.
Yeah. I think for people that are not currently involved, I think we might have a tendency to get analysis paralysis. So we can talk a lot about the different, strategies and what to be on the lookout for. But the reality is when there's an opportunity that's presented to your limited partners to invest, you don't oftentimes have a lot of time to look into the details because the good deals do end up filling up quite quickly. Okay. I would say that of the 24 investments that I'm personally invested into, the average amount of time that the sponsor was raising capital on those opportunities was just days. Sometimes it's just a matter of hours, right? So it really comes down to, the investor really trusting the person that's giving them that opportunity to invest. In your case, for your guests, that's Julie Holly, right? So I would say that your investors are placing a tremendous amount of trust in you, that you've done your due diligence in evaluating the sponsor, in evaluating that particular opportunity for them to look to get invested into, so that when they are given that opportunity to invest, they don't have to be all that concerned about getting analysis paralysis, taking a week or two to evaluate the opportunity, because the reality is most of the good opportunities won't even be available after they've completed their thorough due diligence.
That's wise words. And conscious investor, this is why it's important, whether it's, meeting with me or someone on my team, or reaching out to other people, sponsors that you're connecting with. Like, it's really critical to have those conversations. And I'll just add this. Remember, we operate under a 506B umbrella, and we do that intentionally so that we can support all investors, accredited or non-accredited, in taking that first or next step, which requires, hey, we got to be on that phone call. We got to talk about this. You got to start a timeline, of that relationship and such. So, you want to make sure you're being proactive in those steps. Doesn't mean you're signing on a dotted line or going into a deal immediately. It just means that you're taking that next step towards, okay, I even just opened the door of opportunity for myself.
Yeah. I do have a question for you. Can I throw it the other way?
Oh my gosh. Yes. I love it.
What would you say would be your ideal investor? My story, right? I love my day job. Okay. I love the people that I work with. I'm very excited to get up and go to work every day and crush it in my day job. Right. But at the same token, I'm also thinking about retirement in 10, 15, 20 years. Right. And I love the strategy of investing into real estate. So would my kind of avatar as an investor relate well with your audience?
Very much so. Very, very, very much so. So yes, you actually do represent. So Jeremy, I have a deal that I need you to come into. But you do represent the ideal investor, and so while we have conscious investor, our ideal investor, and what you just described, Jeremy, is a large part of who invests with our company. That is a profile. We look at who's investing, and that is really what we shaped up to be. We're like, wow, really fits. This is the profile. However, we have in a recent offering, we actually opened up intentionally an opportunity for investors with that don't have the six figures to come in with a lower sum to support them in getting started. So we're really on that mission of whether it's $250,000 or more that someone is investing, or if it's a smaller amount, but they ultimately have that determination of, I know I need this in my investment portfolio. I understand it enough to take my first step, and I need to get started. Like, we want to get everyone going on their journey, because you and I, we know the power of it. It is like, okay, yes, our highly accredited and knowledgeable investors, that's the bulk of who is investing. But we've made it a very clear determination of the rising middle class and those who really want to secure their future so that they're not a burden on their families later on in life. They're able to really provide for themselves.
Well, I really appreciate what you're doing in creating awareness, for your audience, and hopefully, more will become aware of the conscious investor, because the reality is most of the friends and family and colleagues that I talk to, when I tell them about what I'm doing, most of them are completely unfamiliar with the strategy of investing passively in real estate. Most investors believe in order to get into real estate, it's either through a publicly traded REIT, or they have to go buy a single family home down the street and fix it up and rent it out, right? They're not familiar that you can actually diversify into real estate, on the passive side. The other side of that is most people that I talk to as well, that haven't heard about passive investing in real estate, wonder why their financial advisor has not told them about the investment strategy, which, fortunately or unfortunately, a lot of financial advisors aren't familiar with this type of investing strategy. And if they are, oftentimes they're a little bit reluctant, I think, to inform their investors on passive investing in real estate, because it can't pay them a commission or an asset management fee, right? So I'm definitely seeing a huge need out there with your kind of, higher net worth, busy professionals, right, who love their jobs and want to continue to crush their jobs, but they sense that there's a void, in their retirement strategy. And this has been an excellent way, for me to fill that void, to set myself and my family up, for the future.
I appreciate your sentiments so much on this. This recently happened. I had an investor who's, at the beginning of learning. Actually, no, this investor has been around this environment, but has not ventured into it. And there can be old thinking that we have a hard time, expanding, beyond, and met with a financial planner who, restructured their thinking. They were thinking, I'm going to get into some of these passive investments. And they met with a financial planner who has them in paper assets. I'm like, I don't have any words, because unfortunately, I should say, let's go on the positive side, because I'd rather go positive here. On the positive side, I do know some financial planners who will refer people into real estate syndications and into private equity to complement and diversify their portfolio, even though it doesn't benefit their personal bottom line. And there are very few out there, but to me, those are the coveted financial planners, because they're truly looking after the best interest of their client versus what they know, their own knowledge and expertise, and what's going to serve them.
Yeah, no, that's great. You hit the nail on the head there. It's really comes down to education. It comes down to having the proper mindset. And I'll take this right from your show. You need to be conscious about what you're investing into, right? I think there's too many people out there that are relatively unconscious when it comes to their overall investing strategy. And they're primarily just leaving it up to someone else, to make those decisions. But I think that it's incredibly important that we all as investors, really become conscious about where our money is going and what exactly it's invested into. And real estate syndications allow limited partner investors to have more control, over those hard-earned dollars that they're choosing to invest.
Yeah, this is so true. I could go on in this conversation. I appreciate you and the time and just the wisdom that you're pouring into the conscious investor and taking their next steps. And conscious investor, wherever you're at that spot, and there's growth. That's all that's ahead of you. There's growth and opportunity wherever you're at. So that's the most exciting part about this part, the journey of life and investing. What is the best way? If someone's listening, and they're like, wow, I'd really like can I learn more from you, Jeremy? Tell me more. What's the best way for them to connect up with you?
Yeah, absolutely. Thanks for asking. I would say I'm relatively active on LinkedIn. So you can find me out. You can find me out on LinkedIn at Jeremy Dyer. Dyer is my last name. So we'd love to connect with anybody that's interested in learning more, or just connecting with me, out on the LinkedIn platform.
So make sure you go connect up on LinkedIn. Jeremy has great content. And, the other element of getting started on your investing, which conscious investor, I'm going to be reiterating this time and time again, is a lot of times we're thinking about being present with our kids here and today. But when we invest wisely today to prepare for our future, we're actually supporting our adult children at that point. So can you imagine if you don't have a plan for your future, and now your adult children perhaps have kids and their grandkids, and they're trying to live their life and care for their family, and are they going to need to take care for you also? Because financially you are not prepared. You really want to make sure that you are paving that path and being involved in, this passive investing through real estate is a very powerful opportunity to help you with that. Until next time, live big, love bigger, do great things.
What's the big deal about investing in apartments? Why is it better than investing in a slew of single-family homes? I've compiled a lot of information on why investing in a multifamily, also known as apartments, will help you reach your investment goals. Head over to 3keysinvestments.com and download the Why Invest in Multifamily guide today.